ABC Forex trading strategy in my book, The Forex Trading Strategies Guide for Day and Swing Traders. I call it a couple different things, and basically it's a pattern which shows that either a reversal or a possibility to get into the trend. So I've marked a couple here, A, B, C. So between A and B we're looking for a strong run in one direction. From B to C it's a pullback. And that's basically the pattern we're looking for. If you look closely, you'll see these almost everywhere. So here would be another one, A to B, C is the pullback, and then we have the move higher. So our expectation is that this move from A to B, after C completes, we're going to have another run. And in this case we do. This would have been another smaller one here, A to B, pullback at C, and then the extension higher. So the basic strategy is that once you isolate one of these, and depending on how many trades you want to make will determine whether you trade these smaller ones, a larger one like this, or if you want to trade, all these little moves. So I'll leave that up to you. The basic entry criteria is that you're looking to enter somewhere between C and B. Of course, if you enter too early in C, we don't know if this is just going to continue down. So usually I'll wait for some sort of pop above this consolidation. So we can see this is kind of moving within a channel down, and then we get this pop above. So this is the long entry area. The closer you get to B, the bigger your risk will be, because we're putting our stop down below C. So the longer you wait, your risk becomes higher, and you're also cutting into your profit. If you get in this area here, your stop's relatively low, and you also have the most profit potential for this run because you aren't eating up any of that momentum to the upside. Whereas if you enter up here, your stop's higher and you only have so much before the next wave also runs out of steam. So there's kind of a balance here between whether you want to be safer and wait for a little more confirmation that this actually is going higher, or you take I wouldn't say it's a gamble because it's a high probability trade since you're trading with a strong momentum run in one direction. But if you enter down here, you have a little less confirmation that this is actually just going to shoot up. You could get a little pop here and then another run to the downside, and that could happen up here too. So I prefer the entry right as soon as you get some sort of confirmation that this is moving higher again. I don't wait for bars to complete. This is a 1 minute chart, a 5-minute chart. As soon as this bar, let me just pull up something here so if we don't know what happens, as soon as this gets above there, I'm looking to go long in that. Profit targets, I look at usually about 1.6 to 1 or a 2 to 1 risk to reward ratio, but I will manage that within the trade. So on this one here, let's say this is 10 pips of risk. If we enter here, I'm looking for about a 16 pip profit from here to here. But if we start to see this sort of slow down, I may just get out here. I'm not too concerned about trying to, I'm not too concerned about missing out on 1 pip or 2 pips if it's, kind of giving me these tails right near my target. I am a bit more aggressive. I like to trade most of these, so I am trying to get out before the next pullback because, as I mentioned, if you look, this is another ABC pattern right here, another one. So there's a lot of these. You don't want to trade every single one you'll see. We'll go into that in a few minutes. Here's another one. Oh, I cut off A to B, strong rundown. So notice the transition here, moving higher, and then this run down is much stronger than these last moves up, which indicates a change in direction. So that's why I'm looking at this to the downside, even though the prior trend was up. So we're always looking for a strong move to form our AB, a weaker move to form the B to C. C can never go past A. If A to B goes here, and then this just goes all the way back up to A, then no progress has been made. So we're not moving down, which kind of negates our pattern, because we're looking for boom, a little pullback, and then a snap lower. So here again, A to B, pullback C, we have this sort of consolidation. As soon as the price breaks below that, we're assuming that this momentum is going to carry through and take us to the downside. So our entry is somewhere in here. Again, the closer to B, our risk and profit drop off a little bit. So I prefer to try to get it right, as soon as it sort of breaks out of that consolidation. It is somewhat subjective. Of course, if you're just looking at, let me pull up my little blocker here again. Right here, you might view this as the consolidation. So then this bar is technically your breakout bar, right? So, and then we have another bar that goes up. So don't get too jittered out by the fact that it doesn't go instantly. The fact is, we're trading with the trend. We're willing to give it a bit of room. Once you put your entry price there, put your stop slightly above the recent high, and then we're looking for a run to the downside. Again, the exact entries, profit targets, I'm always looking to just catch the run and then trade the next pullback. So I'd be looking to get out somewhere in here. Hopefully my target would have been reached. This one, let's say this is a 10 pip stop again here. That looks like about a 2-to-1. So you would have been able to probably get 2-to-1 on that trade and got out if you had a profit target sitting here before the next pullback, and then you could have traded the next pullback. These 1-bar moves I'm not too concerned about. If I was holding this trade, I don't want to hold through this full pullback, but just 1 bar. If it's quickly erased, we're not too concerned. Alright, so let's close this out. This is a 1-minute chart. So here, run to the upside, pauses, the big pullback, but doesn't come all the way back down to A. I don't have these ones labeled, but we can kind of see. So this 9.3 pips. If this is our pause, this would have probably faked us out into the trade. So on this 1-minute chart, we're looking at about 3 pips of risk. You can see it's the second number, the 43. That means 4.3 pips. And if we're looking for about a 2-to-1, we'd be entering there, and that easily would have filled us. Again, if we could have got out here, I'm fine with that. Some of you will like using just once you have your profit target and stop set, just stick with it, and that's fine as well. I do actively manage these, so once I saw this slow down, I might get out and then look to re-enter again down here. If I re-entered there, we're looking at another couple pips of risk, and that one ran for 10 pips, so we definitely would have hit almost any profit target we hit there. Let's switch to a daily chart to I have all sorts of stuff on this one. So here is a British pound chart. Let's see if I have anything on this one. Not really. So here would be another good pattern to look at. This would be the A to B run, strong run to the upside, and we're looking at this consolidation here. This would be our C wave. This is actually a good example because it shows the one problem with the strategy. Obviously, the ones we've looked at look very good in hindsight, But if you are trading this, you view this as the A to B, this is the C, you'd be entering here, and it just barely clears that former high, and then we pull back into another. So we have sort of a multi-wave part C of this pattern. That's not a problem. If you did enter here, as soon as we sort of have this failure to launch, then we want to abandon that trade. If you have your stop set, that's fine, you can let it hit your stop, but as soon as we're expecting this to aggressively move higher, for this momentum to continue, so if it doesn't, we'll have to look at exiting that trade pretty quick. There's no reason to, once you see this type of action moving right back in, there's no reason for you to let it hit the stop down here. Once again, if we're looking at this big pattern, this is all part of that C wave, so we could be looking to enter here again with the expectation that this pops above, and we're looking for it to continue moving up. If it pauses again, that's, you know, the downfall of the strategy. But you shouldn't be losing too much, because if you're in down here and it fails, you know, kind of gets up to this high again, stalls, you can get out, you'll have a small profit. No reason to let it hit your stop here. And as you can see, these are sort of everywhere, but we don't want to trade these ones that are quite small and going against a more dominant move. Let me see if I can find an example here. Well, actually, this is a good example. So this is a rundown. This could be an A to B. This is a pullback C. But notice this rundown is not as strong as this overall move up. So that's how we kind of filter the trades. We're looking for a dominant run in one direction to form our AB, and that could be on whatever time frame we're looking at. So this is the dominant run. So this move down doesn't scare us. This is showing that momentum is up. These moves here are much smaller than this, showing there isn't a lot of selling pressure here, so we want to trade in the direction of this dominant trend. So we're viewing A, and this is your AB, and this is all as the C. So don't get too, what's the word? Looking at too much of a micro scale where you start trading every single one of these tiny little moves, because you're going to end up getting stopped out against these dominant sort of moves. So this we're still looking at, and this is the dominant trend, this the pullback with the expectation higher. So, you know, we don't want to start trying to short here thinking, oh, there's an ABC pattern, I'm going short. No.